Okay, here we are to start the day. I'm just getting into my account. I had a late start to the morning. As you can see, we're up 1.43 and the market's up only 0.5, 0.9, and 0.5. So we're beating the market there. Up $4,700. Do we get any dividends today? No dividends in the mail today. Okay, let's see what we have here in the portfolios. Okay. So even in our unleveraged version of the portfolio, which is what this number shows, we're still beating the market. Except we're not beating the NASDAQ, we're just underneath it. But when you're in between the Dow, S&P, and NASDAQ, that's all you can ask for when you have a lot of leverage. So let's run through our day's gains and losses for the day. See where the market breadth is. So we have the C's up 1%. Nothing unusual there. Emerging market bonds, EDFs, still on fire, still working. Everything else is pretty fractional. FANGU, our tech, triple FANG is starting to really move. But I can't have too much money in that one because it pays no dividend and it's 100% maintenance. I made a video on maintenance in the previous video, so check that out. SLG is down. That's one of the top real estate companies in the world. They have some of the best property in New York, some of the most iconic skyscrapers that you've seen in that skyline. That's SLG, but they have higher maintenance as well, or they used to. They might have lowered it, but still, it's one stock. I don't want to put all my money in one stock. I said that in the video yesterday. I apologize for the redundancy. So, but this is nonetheless what I'm doing. Yang just continues to get pounded. You know what? Man, I really want to do something with that short. Yes, it's offsetting my long here. I have yen is the long put, which we're up 30% in, $500. We made $1,700 in the premium. And we took profits in the last video on the other yen contract. So we're up about 2,000 in yen and we're down 300 in yang. So this is what you want to see. Down 300 but up 2,000. 1,700 in the premiums and 300 in realized gains. Obviously for yen, I don't want to take this $500 gain. I want to take the premium, which is 17. This is a greater gain. I want to hold till expiration on yen. And if it goes south against me, I have my yang put that will offset some of those losses and act as a nice hedge. So 229 margin. I want to keep it around 230 for now, with interest rates being where they are. If interest rates rise, I have to knock down my margin a little bit more. So there's really nothing to do in our account today. Everything is just set. You set it and you forget it. We went into the S&P yesterday and showed you how the market was at resistance of the 200 and it failed. And now it's had a nice little pullback. And there's actually support forming on the chart. As you can see, yes, we failed. This is UPRO. This is not SPY. Let's get the non-leveraged S&P. So here we failed the 200, the orange line. But we're holding support on this purple line, which is the orange is the 200 and the purple is the 50. So we found support on the 50, which is a very important moving average. We've hammered, which is that little candlestick dot there. See how there's just a stick here? This has a candle body, but no wick. This is all wick. So it's kind of a hammer and another hammer, a red hammer and a green hammer at 390. So, these are constructive developments. We bought the dip yesterday. When we hit the 50 yesterday, we bought a couple names that we put in the video. We added to USA and another fund, QYLD. Is there anything else to add to today? I don't see any moves to make. All we can say is life is good. We're living off our dividends. There's nothing to do. I don't have to trade today to make any money to bring home for my family. I just simply use my dividends here, which is about $95,000, and they pay monthly. All these pay monthly, like I've shown in past videos. So I'm going to show you one more thing, which is, these are all monthly dividends. I'm going to show you one more thing, which is our performance, and we're going to get out on that note. All right, performance, we're up. Geez, we took a nice dive in the last couple days. I was up 18%. Now I'm up only 11%. That's okay. These numbers are gonna improve once we get our monthly dividends, and we're still outperforming the market handily. So, okay, we're up 50, now we're up 30, at the beginning of the year. It's a substantial pullback from that 200-day moving average. But again, nothing you can do about it. You don't even care about this percentage. You just care that you're not underperforming. We're outperforming by a ton. So you only care about the dividends, that your performance is basically in line with the indexes, as you see here. You don't care about the day's gain, 5,000. You just care about this gain, the 0.8. You want that to be the same as these numbers that I'm showing you up top. 0.8, 0.9, 0.9. You see these numbers here on the top indexes. You just want to stay in line with them so that you're not in any risk of a margin call. So as we're running this 200,000 margin, as I've pointed to in the past, you don't want to get this going in the wrong direction for you. You want to keep your margin levels low enough and your available withdrawal for numbers high enough. This available withdrawal is your equity number. When that gets to 0, you're in a margin call. So all you want is the index to perform in your account to perform in line with the indexes, so that you're not in any danger of a rogue move in your account that would give you a margin call. Just stick with the indexes and you'll be fine. Don't worry about the performance. Just make sure it's in line. Just stick with your dividends. As I showed you, the 95K is what you can be making with this kind of leverage. Stick with the dividends. Stick to the plan. I wish there was more I could say, but that's just the good life of passive investing. So I'm going to use this free time to make another video on GOF. Okay, this holding here, we're up 4% in, 20,000 in. It's a 4 to 5 star fund on Morningstar, so stay tuned for that. And I'll talk to you guys soon. Thanks.